Welcome to FinTech Matrix, where tech meets money and trends become power. You heard it here first. Today, July 17th, 2025, we're examining what's driving your financial world and reshaping technology across the globe. First, U.S. Congress advances sweeping crypto legislation that could redefine digital asset regulation. And Wall Street is already responding with a surge of stablecoin initiatives. Then, FIS announces layoffs as it transitions to modular core banking, and MIT unveils a groundbreaking AI fintech research initiative. Finally, Turkey joins the global super app race with a state-backed platform as artificial intelligence gains momentum across sector-specific banking models. So grab your coffee, settle in, and let's break down what's moving your money, your data, and your world. Let's start with what's moving the markets today. Here's your finance update. U.S. crypto regulation gains ground. Crypto is edging closer to the financial mainstream in the United States. On July 15th, the U.S. House of Representatives passed two major pieces of legislation, the Genius Act and the Digital Asset Clarity Act. Together, these bills aim to bring long-awaited structure to the digital asset landscape. The Genius Act focuses on stablecoin regulation, requiring issuers to maintain full reserves, undergo regular audits, and operate under federal licenses. Meanwhile, the Digital Asset Clarity Act addresses the key debate over whether cryptocurrencies are securities or commodities, giving the SEC and CFTC clearer jurisdiction. This legislative momentum signals a decisive shift in how Washington views crypto, no longer as a speculative threat, but as a financial tool requiring structured oversight. Big banks move toward stablecoins. Wall Street is responding in real time. Bank of America confirmed it expects to launch a stablecoin, joining a growing list of U.S. institutions developing blockchain-based payment infrastructure. Citigroup, Morgan Stanley, and J.P. Morgan Chase are also exploring tokenized asset offerings as part of internal payment modernization programs. These moves align closely with the Genius Act's proposed framework, potentially giving banks the green light to create dollar-pegged tokens for institutional and retail use, all under regulatory approval. With both legislation and infrastructure moving in parallel, stablecoins may soon become a mainstream settlement tool for U.S. banks. FIS announces major job cuts. In traditional finance, transformation is coming with a cost. FIS, one of the world's largest banking technology providers, has announced the elimination of 133 jobs at its Bellevue, Washington office. The decision is part of a strategic shift from legacy systems toward cloud-native, modular infrastructure. The company says it is repositioning to meet demand for API-first, real-time financial tools that align more closely with modern fintech platforms and open banking standards. FIS is expected to continue restructuring through 2025 with increased investment in AI-powered banking and embedded finance solutions. MIT launches FinTechAI at sale. On the academic front, innovation is accelerating. MIT's Computer Science and Artificial Intelligence Lab, CITSAL, has launched FinTechAI at CSAL, a new research initiative focused on applying artificial intelligence to financial services. Founding partners include Bank of America, Citi, and Wells Fargo. Research will focus on fraud detection, algorithmic lending, risk modeling, AI explainability in financial systems. MIT says the project will bridge academic theory with real-world implementation, allowing banks to pilot advanced AI tools in regulated environments. Panacea Financial expands funding. In fintech lending, Panacea Financial has expanded its Series B round to $62 million, with an additional $37 million led by Vala Ventures. Panacea, which serves healthcare professionals, plans to use the funds to advance its AI-driven credit decisioning systems, making loan approval faster, smarter, and more personalized for doctors, dentists, and medical students. Its AI underwriting tools are designed to evaluate creditworthiness using profession-specific data, rather than traditional credit scoring models, a growing trend across niche lending verticals. Grasshopper Bank taps AI for SBA lending. Grasshopper Bank is partnering with Lendio to enhance its small business administration, SBA, loan operations using AI. The collaboration brings Lendio's automated decision engine into Grasshopper's platform, reducing approval times by up to 40%. This aims to streamline small business access to capital while maintaining regulatory compliance under SBA guidelines. AI is enabling banks like Grasshopper to scale lending operations without expanding headcount, a key advantage in today's efficiency-driven market. Finance segment wrap-up. Bottom line, the U.S. crypto space is entering a new era of regulatory clarity, and major banks are preparing to launch their own stablecoins. At the same time, AI and cloud-native platforms are driving transformation across both legacy institutions and high-growth fintech startups. Now let's shift to the tech world, where artificial intelligence is powering a wave of global innovation, from super apps in Turkey to new enterprise models in the U.S. AI is reshaping global fintech. Artificial intelligence is becoming the core engine of fintech. Startups and institutions alike are using AI to automate underwriting, personalize user experiences, and reduce compliance risk. Companies like Zest AI, which was recently included in CNBC and Statista's list of top 300 global fintechs, are pioneering explainable AI in credit scoring, helping lenders make faster, more transparent decisions. Enterprise adoption of AI is accelerating as banks and fintechs seek more scalable, flexible, and cost-effective infrastructure. Turkey to launch. FinTech Super App. Globally, new platforms are emerging with massive potential. In Turkey, e-commerce giant Trendyol and defense tech leader Baykar have joined forces with Ant International and ADQ to launch a FinTech Super App. The platform will offer payments, loans, investments, insurance, digital ID, cybersecurity tools. This super app will integrate AI to personalize services, adjust risk profiles, and enable frictionless onboarding, mirroring models used in Southeast Asia and Africa. With mobile penetration high and traditional banking infrastructure limited, Turkey is positioning itself as a regional fintech innovation hub. Sector-specific AI on the rise. AI adoption is also becoming more specialized. In healthcare finance, Panacea Financial is using AI to assess complex, profession-based credit factors. In small business banking, Grasshopper Bank is using AI to speed up SBA loan processing and improve underwriting accuracy. The move toward domain-specific AI reflects a larger trend. Fintech is no longer about generic tools, it's about tailored solutions that meet the unique needs of each vertical. Tech segment wrap-up. Bottom line, from credit modeling to cybersecurity, artificial intelligence is now embedded into the foundation of modern fintech. As global players race to build super app ecosystems and specialized tools, the next frontier of financial innovation will be AI first, mobile native, and deeply personal. Let's bring it all together. Here's your final recap and call to action. And that wraps up today's breakdown. From crypto regulation in Congress and stablecoin ambitions by U.S. banks, to AI-driven lending platforms and global fintech super apps, one thing's clear. The future of finance and technology isn't just arriving. It's evolving right under our feet. Whether you're a retail investor watching the rise of digital assets or a tech leader building next-gen platforms, staying informed is your edge. If today's deep dive helped you see the market a little clearer, don't forget to like, share, and subscribe. And tap the bell so you never miss a beat. Drop a comment below. Are stablecoins the future of money, or should we be cautious about banking on the blockchain? And remember, this is FinTech Matrix, delivering money, tech, and trends to your doorstep. Thanks for watching, and we'll see you in the next one.